It's quite a busy week for data, and I'm interested to see where we are a couple of hours into the European Open on Monday, because in the very early part of Monday we get a lot of services data. Now, obviously, the global economy is a service economy, so services data is always quite crucial for me, and we're expecting to see a jump in numbers on European and UK services. It's excuse me, Thanksgiving on Thursday, so it's a 4-day week for the US. Now, I tend to find that once we get Thanksgiving out of the way, we tend to get volume back in the markets. And in the US market, I think we've been lacking some volume, and we'll go through that in a minute. So once we get services data out of the way on Monday, then we've got not a lot else. Obviously got Chancellor Exchequer for the UK is talking on Tuesday, making an autumn statement. Then we've got the Fed minutes on Wednesday. Not expecting any shocks or anything on for that. And then, like I said, US is off on Thursday for Thanksgiving, and then we're pretty dry for data on Friday. So what I'm expecting at the moment is, and just get my pen. So you're looking at the weekly chart of the Nasdaq. You can see my concerns up here. I've blown up the MACD here because we're really at the moment running out of momentum. We're even under the midline on the weekly Nasdaq, and you can see the volume dropping off. So this is what is concerning me about the state of the market. So we've had a marginally lower close last week and a lower close the prior week, and we're still sitting in this Pfizer sort of boom. When we got the Pfizer announcement on November the 9th, the market, everything shot up, or most things shot up, and we've just stayed in that Pfizer range ever since, but on lower volume. And with some, this is divergent. We're making, no, we didn't make new highs. We came under that August high. So we really are tipping back. So like I said, I tend to find that on a normal year, and of course this is not normal, on a normal year you get Thanksgiving out of the way and then the volume comes back. So if I'm right, we'll see some early weakness, or further weakness into this week, and then potentially some bounces after that. So I mean the US alone is still essentially a very bullish market, but it is an expensive market. Now, if we now refer to the weekly on the Dow, this is fibbed to, let me just remind myself what it is fibbed to. That is fibbed to the 2019 high. Where's the, wow, what low I picked there? That's really odd. Well, let me scrap it then, because I can't remember how I fibbed it. If you look at, this works, if you look at the 2019 range, just bear with me one moment while I grab this. It was fibbed to the 2019 range. It was fibbed to it. Right, let me put it back then. Is that February, January. Yeah, I had it fibbed to the 2019 range. If you look at this 2019 range, I think this is very, very revealing on this Dow. because what it is showing is it peaked above here in January, February 2020, did that, and poked above here again in the summer, and we poked above here on that Pfizer news, and we are consequently and subsequently put in a potential sell signal here. The moving average is some way away from us, it's getting a little bit away from us. So I think the very least we need a further pullback for this market to get interested, and there likewise the Dow volume is pulling off. So I think any early enthusiasm in the markets could be seen with some profit taking until we drift back to some support and then get some more push to the upside. You can see if this works out, we should be seeing potentially 30,500 in the back end of the year. If I'm right, we'll come back to 28.9 or 28.5, and then potentially get a push into 30.5 for the back end of the year. Look at the daily on this Dow. You will note that we've had this huge impulse wave on the back of a three-wave move, which actually kicked off with a lower low on the back of the bottom of this channel. So you can see all these lower closes. So we only have one higher close on Monday, immediately closed lower on Tuesday, and ended up lower on Thursday and flat on Friday. So hence why I think we are still going to see some further pullbacks. There's 28.5. So I talked about that on the weekly chart, and that's what 28.5 looks like on the daily. 28.5 on the daily is a reconnection with these averages, which is the 20 and 50-day average. Okay, in terms of wave patterns, we have got a 1, 2, 3 wave, very nice move up here. Wave 3 is always the big impulsive wave. We've had a 4 and a 5 wave pattern. Now we're getting a 3 wave correction, a 1, 2, 3 wave correction. Once the correction's over, then you basically essentially kick off the next round. Now, so the direction after the end of a C wave is crucial, because wherever that C wave kicks off could be the direction for a number of weeks and potentially a month or two or more. So this Dow, these American markets need to pick themselves up pretty quick to maintain any bullishness in this market. Otherwise, if we close under here, then we're going to find this 28.5 pretty quick. Let's zip across now. So for those of you who just joined us for the first time, I'm just going to do a quick analysis of indices, market internals and currencies, then go into commodities and stocks. Okay, now after I've done the initial market internals and indices, by all means tap in any questions at any point, but if you want to turn the mic on and ask a question after I've done the initial analysis, by all means please do that. I would welcome your input. Okay, so let's now go to European indices. Let's start with DAX. Now DAX, this is potentially a really nice bull flag, but whenever you've got a consolidation like this and a bull flag like that, you do need decent dips to get the volume going, and as with the US market, the volume has been not great. So if this is a bull flag, I would still expect to come back into this 13th November area before we go and attack. It needs a run up, basically. That's what I'm saying. If we're going to attack these highs and close the gap at 13.5, there's the gap there from the 21st of Feb this year. If we're going to attack that, then I think we need a run up. In other words, so a bullish consolidation will need a dip before you get the next leg up. So if we don't get a leg up on the Monday on the back of the services data, then watch out, because short term we are lower. FTSE's holding up well. We've come out of my initial major pink zone. These indices, the moving averages are pointing up, they've crossed, but we're a distance away. And every time we get a distance away, we tend to pull back. Why? Because markets love the standard deviation, and we are way above the standard deviation on this at the moment. So we are hot. We've got potentially the MACD averages crossing, and we've got somewhat divergence appearing on the histogram and a crossover in the stochastics. Again, we're not getting the volume up here. Now, I'm not suggesting for 1 minute this is all going to drop hard, drop and drop very hard. All I'm suggesting is we could be looking at some reasonable pullbacks before this market gets another leg up. This is a huge move up here from the FTSE into this major support line. If I wing that across here, you'll see this was the breakup from April, but ever since that push into June, we struggled until we had this blast up here. So it's bullish, but we do need a significant pullback to get the volume in it, is my overall feeling on these markets. Right, let's look at a couple of market internals. Volatility index is very low. Anything under this 25 is bullish. If we start to see us obviously start to push above 26 and back into 30, then that could spell trouble for the markets. But in the meantime, any push into 25, 26 that gets sold could enable the markets to hold up. Dollar index. Something I'm going to be talking about in the coming weeks, particularly as we get towards the year end, is going to be talking about the level of inflation that could be coming back into these markets, which could have a major impact on what this is doing and a major impact on what we see in the markets next year. Now, I actually think there is so much money slopping around in these markets now that I think we're already seeing an uptick, beginning of an uptick in inflation. And I think inflation is going to become quite an issue next year. I think it's going to be the sort of elephant in the room. I think it's the elephant in the room at the moment, but it's going to become quite prominent next year. If that's the case, then that changes the dynamics of what we got at the moment, because one of the core reasons why institutions have been printing money at this current rate and supporting the economy is because of deflation. Deflation is one of the most damaging occurrences that you can have in a market. And if you want to know why the Japanese market has taken so long to get going, if you look at the weekly chart here, Yeah, they only started breaking up in 17, and then went through a really slack box period. It's because Japan's always suffered from major deflationary issues. They're the most guarded, have the most guarded immigration policies in the globe, and I think there are something like only 3% of the population in Tokyo was born outside of Japan. The only post-World War industrial nation that didn't have a baby boom. And so this created massive deflationary pressures for them in the last 20-30 years. And that's why they were so long in breaking up into these sorts of levels. So deflation is a major issue. And so the markets have been flooded with cash, they've been printing money left, right and centre since 07, 08. And I think that's going to come home to roost. I think it's going to surprise the market with some rate increases, which is going to cause a lot of issues, particularly with a nation that's got $30 trillion debt. Okay, enough of that. Right, now let's have a look at, so I think that's quite a startling, quite an important chart, this weekly Dow. Yeah, it's a significant lower close, and I think we at least need to come into 28.5. Right, now let's switch our attention to Forex for a few moments. Pound. If you look at this daily chart, you can see that we are at the top of this channel, and with a major resistance level. If you look far left on this, so I'll squidge this right down, this 133 is a major problem. We only blasted up here on December last year and September this year. Otherwise, whenever we've hit these in this pink zone or above it, so far we've sold pretty quickly. And even back here in September, we took quite a nice push to the downside. So either we start closing above this 133 and go and attack 135 plus, or we spike higher, close underneath this 133 and start to tumble quite quickly. So to me, this is a sell signal. We are playing into this zone, and any spike higher into that pink zone, if we get a 60-minute sell signal, I'm going to get short and stay short. Okay, I've called a couple of shorts in my trading room here and lost money. So I'm just backing off and then waiting to see what is going on with this. I found overall with the pound, the best time to trade this pound tends to be in the London close. There's been a few occasions when I think it was certainly this move over here on the 11th of November. This held up right into the London close, and then within 30 minutes in this 30 minutes around the close, they ran it up and very quickly sold it. So that's what I'm going to be looking to do if we can hit the top of this channel. So the top of this channel is around about 133.30, 150. And of course, even if we're getting to 134, 135, we're only going into the September highs. So, if you're going to get short, you need to get short as high as you absolutely possibly can. So I'm happy to leave this and wait to see if we get any spikes that will allow me to get short. Pound yen. This is what a bullish consolidation looks like. This is potentially completed. So there's a huge upswing, Averages, you're getting it miles away from the averages, and so it takes time. They just wait until it comes down to meet the averages, and then you get the volume pickup, which is what I was just describing in the DAX. You know, we've got this ball flag in the DAX, you know, with a steep climb, but we're having to wait until the averages come back, wait until the volume comes in, and then I think we're going to get another leg up. Well, this pound yen has potentially already done that. So in theory, 137 is buyable in this pound yen, with a stop at least. Well, really, if you want to stay in it, you've got to have a stop under 137. So 137.50 is buyable with a stop under 137. And then if we can just continue to close higher into Monday, Tuesday, then we could potentially come back to that 140, and who knows, maybe more. So this has got more scope. I think that if the pound's bullish, I tend to leave the pound US dollar alone and buy the pound yen. If the pound's bearish, I flip it. I short the pound US and leave this alone. Why? Because at the moment I'm really bearish the pound. I don't think it deserves to be this high, but I have to brush that aside. So I've got a belief that the pound yen can go higher because of the Japan issue and the inflation issue in Japan that still exists. So I tend to have a bias towards the pound yen if the pound yen is going to continue higher, and I'll short the pound US if the pound US triggers short. Right, euro. I'm try not to spend too much time here. We are really struggling with this euro US. This is a huge area that we've just rejected on last week. So I would have thought this is potentially a sign that the dollar strength could come back in, unless if we close back inside this 119, then we're going to go back to 120 plus. My feeling is that we're going to at least pull back. We're going to reconnect with 175 at least, and potentially come all the way back down to the bottom of that box, 116, 115, 116. Again, based on volume indicators and just that whole support and resistance thing, I don't think that euro is going to pop up. But I'm certainly going to be wrong. If that closes above 119 on Monday, then we're going to see 120 pretty quick. Euro yen. I've got this 122 with this big heavy dotted line because this is a big fire line for the euro yen. At the moment, I have to say that, well, if we close on this 122, we're going to drop fairly fast and find ourselves at 120 pretty quick. If we close above 123, 124, then we could wind our way up to 127, 128. I'm just not trading it at the moment. I'm just leaving that alone. Zipping through a few more. There's the strength of the pound seen in the euro pound. I think that 89 is going to hold. We may come and see 88 again. Ultimately, I think this will pick up. I think that will get going. Let's just tidy that chart up. I think that's a decent buy signal. And if this starts creeping, if this comes into this zone and finds some buyers, I think we're going to find ourselves getting back up to those highs pretty quick. Close underneath this 88, and this is in real trouble. That's going to see 87 pretty quick. So it's a decision-making apex here. It's going to be a stock, anything that's in an apex like that needs to close one way or the other. all the time you're in that apex, you could go either way. So that's no help to you if you want to trade it. So don't trade it, is my view. Yeah, the Brexit negotiations closed up because of a COVID case. You're absolutely right. If the yen tends to get repatriated if the markets close, if the markets drop, sorry. So you're absolutely right. I think the markets are on a key knife edge. If the markets continue to drop, yeah, I would totally agree with you. I would expect to see the yen gaining strength, the pound yen dropping off. The euro yen is already very delicate up there anyway, it's just hanging. And yeah, and the pound yen obviously would just drop out, would roll over potentially. Let's look at the US dollar yen. Yeah, the big November 9th. This is typical of what the markets are at the moment. That's the Pfizer push, and we're still in the range. And if you look at let's go back to the DAX for a second. We're still inside the Pfizer range in the DAX. That's the Pfizer range in the DAX. However, the US market, Pfizer range, actually, yeah, it was the same situation. Was still inside the Pfizer range. So that's why I think normally when you get a big blast to the upside, you normally at some stage get a retrace back to that blast because so many traders missed out on that move. And that brings me back to the 28.5 again. Because this broke up from 28,550 on the Dow. And that's what I'm suggesting we could go to. Right. Aussie New Zealand was something that I was very interested in. Because I like this has got a potential pin bar buy signal right on this 152. What do you think of this, Ken? You're the Forex guy. You're the Forex expert. What's this Aussie New Zealand going to do? For those of you who don't know, Ken actually resides in New Zealand. That's right on the line. That's a really, really interesting thing. I think this Aussie New Zealand is going to push up. I think we could find ourselves up at 106 pretty quick. I did try buying this the other week and I took a trade, got stopped out, so I left it. But my feeling was I'm just in too early. We had a really big buy signal up here on the 21st of April, and we went on quite a nice run up here. Not committing, okay. But I think that Aussie New Zealand is good. Aussie US is sitting up, so any pullback on that one to 72 is going to potentially take us up to 74. Yeah, I think that Aussie New Zealand is one of the best Forex charts out there at the moment. Unless, of course, this pound US really busts through that 133. Right. Let's look at quick look at Bitcoin, then we'll move on. Bitcoin is just on fire, getting very, very close to that 20,000. So we've boomeranged. Let's get some more data on this. Fascinating chart. This is a bit like where we are with November 9th, in that, when something blasts up, huge blast up from here into 20,000, and then what do? We come back to the breakup area, and we do the whole thing again. So this is typical market consolidation. Get too hot, we wind back, 3-wave pullback, 1, 2, 3, 3-wave uptick, 4, 5, takes us back close to there. So it's hard to see that not getting up to 20,000 again. And look at the volume. This is, we've got a follow-up in the volume there, and that's what we've not got in the indices. We've not got a follow-up in the volume, which is why I think indices are vulnerable. Right, I'm going to move on to commodities. Let's look at metals. Gold. That's range bound to say the least. I think this could just roll. I think at the moment this could just roll over. If we close under 18, for those of you who know me of old, I've been calling ever since we had this spike up here. I've been calling for 1800 in gold. So I think any push into 1880, 90 could get sold into and see us come as low as 18. We could even come lower. I think we could conceivably come right the way down to, who knows, we could even come all the way back down to this level here, even down to 15. But I think next stop is 18. I find that hard to believe. I did have a go at buying long, just in case I was wrong, just in case we got a squirt up. Got $50 on the upside, and then got a $5 stop out. Whoops. So silver. Pathetic. It's got to be lower. I find that hard to see that going higher at this stage. It needs a dip to get the volume back in it. Copper is very interesting. Let's have a look at copper. The December contract has just kicked in, so we've had a contract switch over. I think this is too high. We've slammed into that trend line resistance. Let me draw that a little bit better. I think we're getting too hot. I think that's time for a pullback. Oh, we're right into this resistance level, look. 73.62 is resistance. So we may go and see that resistance, but be careful, because this is potentially very divergent. We're rising up with lower highs in the MACD. If anybody's in that, have a good long hard think about what you're looking for in copper. Right, let's look at oil. Really frustrated missing the move on Friday, because the indices were rubbish for this. Well, they weren't rubbish. The indices did give a good move, but look at the volume. With this big spike on the 18th. That's OPEC. OPEC met on the 18th. But there's no follow through there. So I'm suspicious about the oil at these highs at the moment. It's a bull flag. I mean, it's sitting up there, but we're getting very close to that pink zone, which was a real problem for the oil. Sorry, I'm just trying to get this chart positioned properly. Whoops, can't do it. So I think this is that's a very nasty pin bar sell signal there, and we're not able to close above 43. So any market that can't close above a pink zone like that, I think any push into 43.50 could get sold. So be warned. Right, let's push into, quick look at coffee, and I'm going to move into stocks. Coffee, that's a massive sell signal. So that is potentially going to come all the way down to 11,170. Wheat is just anything that can't close over the 20-day average is lower. So that looks as if we could come into 580 on the wheat. I don't trade wheat this time of year anyway. A lot of people don't. The volume, it's only normally pushed around by the movement in the dollar. Right, stocks. I've got a really good watch list set up. Let's go through the UK first, but then I'm going to zip through some US stuff I'm looking at as well. Let's go through the financial services in the UK. Kicking off with Lloyd's. So it's above the pink zone. It's had a really good volume spike up here and a consistent volume up here. And could go higher. But I think it's vulnerable. At the moment, I think this market's gone as far as it's going to go at the moment, but I could so easily be wrong. I just think my message to you is just protect your profits. Now, whether that means taking some off, taking it all off, moving your stops, that's for you to decide with your whatever your trade plan says. But of course, all the time we're sitting up here, this could just blast up. You know, at the end of tomorrow, we could find ourselves up there at 38. Who knows? Maybe even 40. But just be careful where this market is at 10 or 11 o'clock and make a decision. Because once all that data's out, you know, I think that's going to be really telling whether this market is going to be sustainable or not. Let's have a look at Barclays. That's been on, yeah, from a low of 73, we're up there. We have been up as high as 143. I think we need to hold this 135. If we close under 135, we're going to do some serious retracements. And we could even pull back to 110, 112. But it's at the moment there is no sell signal and it is holding up. So it's all about risk, money management, your risk. Standard Life sitting up well, looking as if it could come and see 466. Big run, vulnerable, but no sell signal and holding up. Legal and General. We'll have a look at Hsbc. We're on the subject of banks. Let's have a look at Hsbc. It's a very, very similar pattern. We're holding up, not doing much. Interestingly enough, we're beginning to see quite a reasonable drop off in volume there. So be careful. Legal and General. Let's look at some other financial services areas now. That's on a bit of a tear. That's closed through a significant barrier. That's a really good close for a Friday. So that could go all the way up to 300. Very nice run. All of these we've been talking about for some weeks now, so anybody who's been coming into the room for some weeks should be doing well. Admiral up, but Aviva sitting up above resistance. I would have thought that at least, again, as with all of this, we may well see a pullback. And NatWest, okay. Yes, of all of them, that's the most vulnerable to me of all of them. Why? Because of the way in which we're coming up on lower volume with momentum coming out. I think it's losing short-term momentum, but there's no sell signal and we could still go higher. But it's had a decent run. Let's come all the way up from 90. So that's a very, very good run. Be careful. Right, let's move across to a couple of other sectors. Let's look at Rolls-Royce. Potential bearish consolidation. That looks as if we might drag down to 69 again. So be very careful if you're going to engage that one. BAE, it's been on a tremendous run. Huge buy signal down there on Monday 2nd. BT. Now, this is what concerns me. I did say last week that you know, this is my sort of word of caution to everybody in the room. You know, this has just come from 96 to 130. So we all know markets don't go up straight up; they go in waves. So we've had a very good impulsive wave to the upside, and we are getting a pullback, and we could so easily come and see 110. Having seen 130, we may come as low as 110, which would bring us right back to support. So it all depends on what you're looking for. If you're in this and you are just in it for the long term, then do nothing. If you are looking to exploit the wave moves in something like BT, then you should at least have been taking half off, if not all off at that high. Okay, so it's down to your objectives, your aims. Let's have a look. Let's cut across now to some other stocks. Let's look at, right, let me get to my list. Bear with me one moment while I just grab my pharma. Okay, yeah, we've not looked at any farmers, have we? Sorry, let me just do that. Let's go through. Here we are, Autumn UK list. Griffin. It's gone right into that resistance. Sorry, let's look at farmers first, then we'll look at miners in a minute. Right, Glaxo. Okay, so this is what I drew last week. I had that line up into that 1453, and this time last week I drew that line back to 1366. So I think this pullback is holding, and I think we could go back to 1450, and if it can find enough buyers, then I think we'll find ourselves up at 1500 quite soon. The jury's out until we close above at least 14. Another lower close in that could take us all the way back to 1346. Right, let's look at your pharma. So when you said pharma, which one did you mean? Astrazeneca. Okay, let's look at Astrazeneca. Oops. For those of you who missed the beginning, this is all recorded, so I will make sure you get hold of this. Ooh, that's a nice buy signal on AstraZeneca. A new low, immediate close above. Complete engulfing bar. We've still got this gap, this yawning gap here. So potentially 82.10 is a buy to see us attempt to get back to 90 plus, potentially. Yeah, I think you need to be careful with those with these biotechs doing the COVID vaccines, because these guys who are producing these vaccines have all made a commitment to do them close to cost. So I wouldn't start leaping into them thinking they're all going to be a gold mine, because I don't think that is the case. I mean, if we look at Gilead was one of them. Their drug has just got, I think Trump took Gilead's drug. That's got a buy signal sitting on 60, so that might make its way down to up to 67. Let's look at Moderna. Did well on the the initial spike from Moderna came up here on May. This big blast up on July. Okay, they are doing well. Yeah, that's a significant blow up. Let's look at Pfizer. Yeah, that's a really good blast up with Moderna. Look at that. It's what I call a kiss and tell. There's it blasts up here on the 9th, as did most stuff. But it only pulls back to the trend line before it pushes up again. So that's closing above 95 on Friday was very significant. But if you look at Pfizer, I'm sure they are sitting up nicely as well. One of the directors sold. Yeah, no, it's not. So we had an initial spike up on the 9th, but this is just pulled right back into the range. So that's just so it's spiked either side of that box, but it's sitting inside that. I still like Pfizer. I still think that's got the potential to work its way back up there. Yeah, Gilead's had a rough time, isn't it? It's Trump started using it, then who started talking, knocking it, telling you not to use it, etc., etc. That's why I think you just got to be really careful with these pharmaceuticals. I think it's a great sector to be involved with. Things like Bristol Myers, to me, that's going back up to 70 on Bristol Myers. This is US stocks. AbbVie, all of these guys have been tremendous movers. Abbott Laboratories, CVS, all of these US guys are great. Way outstrip anything you'll see in the UK. Humana, it's a different. I shouldn't have shown that. That's a completely different kettle of fish. Medtronic. These are not necessarily farmers or COVID related stocks. They're just in the healthcare sector. Some of them are drug manufacturers, some of them are drug distributors, and so on. But yeah, it's a great sector to be in. That's done really, really well. Vanda, what's that one doing? Ooh, that's coming to huge support. Look at that. If that dips under 12, I think that's a buy on Vanda Farmers. Right, where was I? Let me look at Andy's one. Right, there's Vodafone and so what happened to Sage? Is there a story behind Sage? Ooh, That's nasty. That is very nasty. It was certainly struggling. This is why I don't trade stocks that have got messy charts like that. I really don't like charts that got messy stocks. Is anybody in this, Sage? It had a decent, having said that, it had a decent run up there, didn't it? It looked all right. But it's just not a very attractive looking stock. You bought it at the close, right? Okay, that's very brave. Let's have a look. Let's do a bit more analysis on this. Why did you buy it? What made you buy it? Did you just think it was cheap? As simple as that? What made you buy it? Just out of interest. Whoops. I think you could still see 570, 574. I think it could still go down to that April level. But personally, I would not have bought that personally. Divvy and the drop, okay. That is not for me, but we'll keep track of that and we will come back to that. Let's look at, what else did I mean to look at? Let's go back to the COVID drugs for the moment. Let's look at, I've forgotten to keep track of BioNTech. Right, because it's choppy, isn't it? Very choppy. So we just close the gap. So we gap up, come back to support, we'll close the gap. It's not too expensive, so potentially that 95, 99 could be a buy, because if this works out, that could go to 132 and potentially 150 if it really gets a bid. We'll see.
Right, all these companies are looking for approvals right now, right? Once the approval comes through, then the stock will be going to go up.
So can you just repeat that? I mean, I missed the first part of the sentence.
Yeah, I mean, BioNTech and all these firms have sent in the approvals right to approve the drug. So once that gets approved.
Right. Okay. I see. Yeah. The applications are already going in, aren't they? Well, at least one or two of the main 11 have applied for emergency approval, haven't they?
Yeah, they're talking about starting as early as next month.
Yeah, because yeah, a lot of these, well, is it Pfizer's? There's one that's already got quite a few million vials already, isn't there? Well, I think they're all the main ones. The top three are being produced already. They're just sitting there waiting. Contracts have been exchanged a long time ago, and they're just waiting for all the final approval to distribute them. So yeah, these are. So if you want to get involved with this, then if you believe these stocks are going to go up, then these are the kinds of prices you need to try and buy to get involved with it, if you want to get involved with that. Interesting how Pfizer is pinned back though. Right, let's look at Regeneron. I can't remember the story. There's a story behind Regeneron. Was their drug? That's popped underneath that 520 support. Right, let's look at Vodafone. It's having a good time. It's almost filled the gap, closed higher on Friday. So if we can close back above 127, it looks higher. Tends to be quite a stodgy stock though, this one, I find. Okay, so the last main high was 138. Well, we look as if it's a strong move, so if we do see 120 again, I think that will get bought. But obviously we've got to get back above 127 for that to do anything. But it's a good move. This is a good impulsive wave. The pullback appears to have been bought. We just need to make sure, if it's going to continue, that's got to close above 127 pretty quick, pretty soon. The next couple of days for that to work. And let me go to right. You keep shouting out any stocks, otherwise I'm going to go back to my list here. Right. SMD, yeah, Tesla. I was looking at Tesla last week. Yeah, I didn't look at the oils, did I? Let me look at the oils on the UK oils. BP holding up but struggling. Yeah, I'm a little bit nervous about where oil is at the moment. I think oil may need a dip. Shell, Divi stock, holding up very well. Good close on Friday. May pull back, but looks good. SMDS. Looks as if we could see 315, but with them we could potentially wind our way up to 355. It's the kind of stock that takes a while to get going, I think, but so it still looks as if that could pull back further. This picks up on what I was saying before. If a stock's had a good run and you're in it for the medium term, then think about taking profits. If you're in it for the long term, do nothing. But I think short term, I think that's potentially coming down to at least 310, 315. Let's look at that. I'd say lower. I'd say that 26.47. I think that's a tough area for it, and so I think that's lower first. Right, let's look at any other UK stocks. So I'm going to move on to US stocks now. Let me go to my UK stock list, make sure I've not missed anything here. Informer. I think that looks as if it could come and looks lower before it's going to go higher. It's just not sitting pretty up there. I think it needs a lower move. Griffin has hit that 88.70 that I pointed out before. I think that's lower, short-term lower. Pan-African, struggling. That's really struggling. I'll tell you what's not. I should have on there is tallow. I've not got tallow on there. Sitting up, but it's at a major juxtaposition. Let's have a look at EasyJet. Looks lower before it's going to go higher. To me, I think it needs I think it's due a further pullback. IAG. Holding up. For my money, again, likely to come lower before it goes higher. But it's holding up. Right, let's look at US. Unless CMC, right. Hang on 1 minute. It's just the broker. Significant move on Friday, so looks higher. Any pullback to 358, 355 is potentially a buy. Wow, it's really running, isn't it? Really running. Been on a long old, been on quite a run, isn't it? From 73 back in April last year. Wow. How much? What do you expect? What are you looking for in it? I take it you're in that. What are you looking for that in, Andy? Have you got a price target for that? 440. Right. Okay. Volume's not great. How soon do you think it can get to 440? Is this something you're prepared to sit in? Or you think you can get to 440 pretty quick? 3 months, right. Okay. I just find the stock, you could be right, but if a stock's going to really charge, I would expect to see a lot more volume than that. That's reaching quite a high number on the back of relatively low volume to me. But I'll leave that one with you. Right, let's look at my US stocks, and we'll go to Tesla as well. 1.1 billion, okay. I'll tell you what, they had about 10-15 years ago, CMC had one of the worst reputations in that ring of brokers. But that's a while back. Right, now I want, so I've just lost my list, I'll just find it again. Right, let's look at the big boys. Netflix. I think this is a good consolidation period for Netflix. I think these levels could get bought. So we've had a high this year of 576, and we're back down here at 488. I think any dip here is buyable. I think we could at least get to 535 at least. So I'm going to be buying some Netflix. Novavax, NVAX. That's been as high as 190. I'm not going to buy into that unless that starts closing above 90.91. But that's something I'm interested in. Let's go through the list carefully. This one I like a lot. This is UDA, or DAO is the ticker, or certainly the ticker that IG have given it. Any pullback into 28, I'll be buying to see if I can get at least a 35 on that one. I'm going to keep you up to date with these. Broom. This is an online US car sales company. You know what? I'm not going to trade that. I'm going to leave that to one side for now. Oil, some oil stocks. Occidental. I'd like to buy a pullback on Occidental, OXY. I'd like to buy, if oil does pull back, I'd like to buy 11 on that if I can. Now, I'd like to buy a pullback on that one. So based on what I've said about the US market, the Nasdaq, I'm just waiting for pullbacks on these. Frog. I'm gonna start. I'm gonna wait and see if we get a higher closing Frog, because that looks if we could come and see 57 at the moment. So I'm not as that's on my watch list, but I'm not buying now. Intel, I think is going to be worth a shot. I'm not impressed with Intel at the moment. There's way too much red on this chart. If that closes above 46, I'm going to start buying Intel. Okay, I'll look at that in a minute. Yonja, VLNK, Goodrich. I like the volumes on this. I would like to buy 35 if that lets me. Not going to go with that one. Data log. I'm going to leave that one for now. Cleveland. That's too high for me. Bristol Myers one I've already mentioned. I would like to buy 60 in Bristol Myers if I can see it. Alibaba. I think this Alibaba is picking up nicely on volume. So if I can get 259, I would buy Alibaba. And have I got any others? Zoom, yeah, I have been looking at Zoom. That is the right one, isn't it? ZM, yes, must be. Yeah, so that 375 has got bought. I think it's good. I think if we can see, ideally, 400 again. It has only crept, but it's a good close on Friday. So, I mean, certainly 425 will be a nice pullback here. I feel as if you're chasing the market a bit with Zoom buying at 425, because all we've done at the moment is bounced into that resistance. I think if you're patient and you see 400 on that one, Peloton, then I think that is worth a go. Peloton's very expensive. Whoops, sorry. Let me go and find it. You know, I have to when I buy a stock, it has to be a brand I like, and there's nothing fundamentally wrong with this brand for me, but I just it's not a sector I'm interested in. You know, it's had a 1, 2, 3 wave correction, a 1, 2, 3 wave bounce. It's at a lot. It's got a lot of resistance in this 110. If you're going to invest, if you want to invest in this one, I'd try and wait for a bad day to get into 95, because I think it's due a pullback before that's going to go higher. BLNK. This is to do with electric car batteries, is it? Wow, what a stonking move. And it saw a lot of volume on Friday. No, you're not in it, and yes, it's car batteries, I presume. Wow, that just shows you what can happen, doesn't it? So there was a warning to this in July, came back into the pink zone in September. Wow, we were down there at 580 just a matter of a couple of months back, and now we're 23. Wow. Crazy. So the signs were there back on the 11th of November. Right. I think there was a good indication here on the 29th of October at 770. That was a good buy signal there for me. New low, immediate close above, and you could have got a tight stop with a nice price back then if you're watching it. I don't think you can do anything with it. You just got to and that could just keep going higher. That could go, who knows, it could double again. Yeah, you're waiting for mid-60s. Back when? I think, if, like I said, I think that 29th of October was the key, and then getting in at 775, I think, was the key. You're above the pink zone by then. It was holding above the pink zone. And as soon as we got up here in the 5th of November, we're above all the averages. So, hey, we've got the benefit of hindsight, but there's definitely a reversal signal there on the 29th. I don't think you can do anything with it at the moment. At the moment, it looks like 14.5 is the major pullback area. It may well come back there, may well. If you're really patient and set an alert on it, it may come back. Is it an AIM stock? Okay. Listen, I've been talking for NASDAQ, right? Oh, if it's NASDAQ, that explains the move. I'll tell you what, if you look at this intraday, let's look at this intraday. Look at this 10-minute chart. I think NASDAQ stocks are you can day trade NASDAQ stocks if you know what you're doing. But that's look, every time that comes back to the average. So on Thursday at the open, the cash open, we were down there at 14.5 getting bought. So that day in the cash market, that moved from 14.7 to 19 on just the cash market session on Thursday alone. So you could try and do that, but hey, now it's so high now, I think the opportunity's gone. And look at the volume at the open here. Look at the volume on that open. Huge spike in volume. And of course, NASDAQ stocks are traded prior to the open, which is why they are good for day traders. You can buy and sell NASDAQ stocks an hour before the main cash open. Right. Last call for anything else. Okay, let's have a look at Sage on a day chart then. So we gap down, we open up at 607, we push up to a high of 620 before dropping to 585. It is day tradable. If you look at a 5-minute chart, you get a sell signal up at 617. I wouldn't day, I don't day trade UK stocks. Right. Oh, Saga, right, okay, Saga, sorry. Wow. What has happened to Saga? Are they getting bought out? Is that a buyout? Is that a bid? Right. Because they were struggling down there at 17 and suddenly they go to 350. That's... Is this is this Saga the over 50s thing? Right, it's issue at 12p. Why would that do that? I don't understand. Okay. This is one for 15. Right, okay. Wow. Mr. Dahan, the heir to Saga, lives up the road from me. Right. Thanks very much for joining me. I'm going to go away now, and I'll send everybody a copy of this video, especially for those who missed it. Have a good week. I will be here at 6 o'clock on Wednesday for the midweek review. Go to the tradeeasyway.com, and on the home page you'll find a button to all the events for the link for Thursday. I tell you what, I'll give you the link for Thursday now. Why not? Let's go to my account. Go to the meetings. Let's go to Wednesday. Right, here's the link for Wednesday, for those of you not registered. Right, what's happening on Thursday? It's Thanksgiving. US Thanksgiving. Right, thanks a lot, everybody. Hope to see you on Wednesday, if not next Sunday. Anybody interested in day trading and investing, then drop me a line. And because I have programs and mentorships for that. All right, thank you very much. Bye for now.